Hey, welcome to another episode of Financial Theory. Let's talk today about stocks. The last 10 months, I have entered the stock market. I'm just going to share with you today with the results. Some interesting results, the first 5 months, and then I'll show you the other 5 months after that. So initially, I slowly put in about $121,500 of my own money into the stock market, buying individual stocks. Now, for the first 5 months, you can see here that my stocks did pretty well. For the first 5 months, I made about $28,000 profit. But after the end of October, everything went south and everything went downhill from there. So for the last 5 months, from November 2025 to now March 2026, my stocks have crashed pretty badly. My stocks went down around about $43,000, which is a massive turnaround. At the moment, I'm actually down about $14,500. So now the thing with the stock market is you got to understand that stocks go up and down all the time, especially if you pick mainly individual stocks, but also in one sector. They can have a thing called stock market rotation, which happens from time to time when investors feel scared about a certain sector and they tend to just move their money from one sector to another. At the moment, that's what's happening. A lot of investors are getting spooked by technology stocks due to the high capex spend of the big tech stocks. Companies like Google, Amazon, Meta, Microsoft, for example, they're all spending in excess of $700 billion in 2026 alone on AI. And a lot of investors are getting spooked by that and just thinking, where's the money going to come from? So investors are thinking that they're spending way too much money and they want to see the results. They want to see the net income from the AI spending. And that's why a lot of investors are getting spooked, and that's why they're moving their money from tech stocks into the more safe stocks, things like energy, utility, infrastructure, industrials, financials. These sort of sectors are doing a lot better than technology at the moment. For example, Microsoft is one of my largest holdings, and that has gone down by like 30% from all-time highs. But am I worried about my whole portfolio dropping $43,000? No, not really, because all of the financials, all of the fundamentals of all the companies I've selected, they're all rock solid. There's nothing wrong with these companies. Companies like Google, Microsoft, Amazon, Meta, all these sort of companies. So I've invested in these great tech companies, and there's absolutely nothing wrong with their fundamentals. It's just at the moment, investors are just a bit spooked about the high capex spend, the war in Iran, interest rates. All these sort of factors are combining into what we're seeing right now, which is a lot of uncertainty in the stock market. But here's the reason why I am not at all worried about my portfolio crashing by $43,000. It's because I'm a long-term investor. Like, I don't care what's going to happen within the short term. Like, stocks go up and down all the time. So whether it goes up and down $10,000, $100,000, I couldn't care less. The main thing is I'm keeping these stocks for the next 10, 20, 30 years. I know that after 20, 30 years that these stocks will be worth millions of dollars. They'll be worth a lot more than what it is now. So I'm not at all worried about that. And I know I've done a lot of research before I bought these stocks, and I know that all these stocks, the fundamentals are absolutely rock solid. So in the short term, the stock market can act very irrational. Even if a company smashes earnings, the stock might still go down anyways. That's how silly the stock market can be sometimes. You got to ask yourself, do you want the little crumbs or do you want the whole loaf of bread? Don't know about you, but I want the whole loaf of bread. I don't want little crumbs. That's why I don't trade in and out of stocks, because that's a losing strategy long term. A lot of day traders actually tend to lose money long term, and that's been backed up by data as well. It was like something like 90% of day traders tend to lose money long term. So if you're going to be in the stock game, go about using the Warren Buffett strategy, the buy and hold. This is the method that I like to use as well. If you're going to be in the stock market, this is what you're signing up for. If you can't handle seeing your portfolio drop by 30, 40, 50%, then you shouldn't be here in the stock market in the first place. The stock market rewards people who can keep their composure, people who see that their portfolio has dropped 50% and they're able to hold their nerve and not sell out. And you need a lot of patience in this game. A lot of wealth is created through patience. People with no patience will tend to lose money in the stock market, guaranteed. So that's my journey so far in the stock market in the last 10 months. I've actually really enjoyed it because I've actually done a lot of research and a lot of self-learning about the stock market. I did a ton of research on each individual stock before I actually purchased them to make sure sure that I was buying at a good value and that the companies that I was buying, the fundamentals of the company were very good, that they were growing every year, that free cash flow was growing every year, that the net income was growing every year. So these are the things that I like to look for. And usually the companies that I buy tend to have low debt. I don't usually like to buy companies that have an insane amount of debt, because obviously if the more debt a company is in, that's a higher risk company. Am I worried at all that my portfolio is at the moment minus $14,500? Well, not really, no, because I know that later in the year, or could be next year or whenever, when it goes back up, it will be a very violent exponential burst upward. The stock market can change within the blink of an eye. I am not at all worried because I've done the research. I know that the fundamentals are rock solid of all the companies I've selected. It's just a matter of waiting and just see how it goes. And obviously if the market crashes further, buy the dip. I thought I would share a bit more about my own personal journey with you guys. Yeah, a lot of people would just show their wins, but they won't show their losses. So I thought there's no point in doing this if you're not going to be transparent about it. So I've shown you my wins in the first 5 months plus $28,000, but then in the last 5 months, I've actually lost $43,000. But keep in mind that these are just paper losses. I haven't sold anything, so technically I haven't lost anything. You only lose money when you actually sell out of a losing position. Technically at the moment, it's just a paper loss, but yeah, I thought that you guys would enjoy this little video. Yeah, if you enjoyed this little video, give this video a thumbs up, like, comment, share, and I'll catch you guys in the next video. See ya.